Okay. Good morning, everybody. We're starting shortly. So this morning, good morning to everyone listening from wherever you're listening from. You're listening from TikTok, from YouTube, from Telegram, from X, anywhere. Good morning to you. Shortly, we're not waiting, we started already. And we started already, and once you look at the charts, we were here on Monday. Today is Wednesday. Now on Monday, certain trades are taking, and some other things like that. All right, and it's very important that we go back to revisit them. Normally, that's what Wednesdays are for. We just go back, revisit those trades, and then we'll just continue from where we are. Okay. All right. So let's just proceed here. Let's proceed. So after analyzing USDJPY last week, on Monday, I told you that the price was at this level. This other block here, this was on Monday price action, as you can see there, Monday. So price was at that other block, and then what I told us that we're going to do is we're going to sell, because I was saying a sell bias from this level here, that the only restriction would be this 4-hour the only restriction would be the 4-hour fair value gap, of which price did not restrict it. So eventually price just took it off. You get? So price just took it off. So in our own interest, price played according to what we're expecting. You get? And I said the drawn liquidity was going to be this low. It's not that far end, but this low here. So this low here is the drawn liquidity, and that's where we're trading it to. Now there's a re-entry from the 2-hour time frame. Do you get? The re-entry is as a result of this internal bullish move. So if you look to this side, you can see that price made a bullish move here and then it broke out here. So what I want to just trade is just a reversal back, a pullback back, and then to target the external real liquidity there, which is this sell side liquidity. Okay, so this is where we're going to be taking the trade again from here, and then taking it way down like this. Shouldn't be that hard. This is the continuation for USDJPY. As you can see, price is very bearish. So what I'm just going to be expecting, today is Wednesday. Usually this distribution will start from Wednesday on a normal, normal case, right? Yeah, so distribution normally will start on Wednesday. Do you get? So we'll just wait. Our entry will be at that. My entry is at 159.291. That's what we're going to be waiting, or that's what we're going to be taking the trade from. And the exit as a stop loss will just be a little bit above that trend line, the falling line there, which is around 159.725. You get? That's where the exits will be. That's where the exits will be. So I think that will be all for USDJPY. And if you check today's news, there's no news today at all. So if you go to my forexfactory.com, today is what now, 15th, all right? This is 15th Wednesday. So there's no news at all today. Usually when I see no news, I usually like it though, because on days like that, sometimes, so days like that, that's why I say sometimes. So on days like that, yeah, I have experienced, now this is out of experience, I have experienced that price usually moves smoothly on days like that. That is, price would always move smoothly on days like that. So okay, so hopefully today is one of those days where price will just move smoothly, get to where it's supposed to get to, and then just deliver as it's supposed to. You get? All right, so to proceed, that's for USDJPY, by the way. Then to proceed, we have USD card. So USD card also, I told us that this was going to be the drawn liquidity, remember, on Monday, and I gave reasons. I said number one is price has swept the structure high, which is here, and second thing is the entry will be a Quasimodo, and I said you should use the minute time frame. So if you look at it here, using the minute time frame, price reversed back inside the level here, which is here. Price reversed back inside that level. The stop loss just slightly above, and then the drawn liquidity was the target. So if you follow those instructions given on Monday, I think this is one of the trades that you would have gotten, but price delivered quite easy and clean to the drawn liquidity. So where I'll be expecting a reaction off from for a sell continuation will be around this level here. So I'll be expecting a sell. I'll be expecting a sell from this level, because so it will be a continuation. You get? It's a continuation. So maybe price will just, two things can either happen. It might be that price will just use this high that has formed now as an engineered liquidity, and then go up, tap into this level here before eventually continuing in its trade, or it breaks structure then uses high as liquidity instead of engineering liquidity, uses as liquidity and then does the same thing. But either ways, anyone that it wants to do, this is going to be, or this is my bias for USD card. So I'll be waiting, or I'm expecting a bearish continuation for USD card. Then for USD CHF, I had similar trade that was given on Monday. All right, I still say the same thing, that the only problem with this one is that the drawn liquidity is far. It's not a problem though, it's just that you get to take more profit. So like I told you, after the sweep of liquidity here, that you should use the Quasimodo, QMR, reclaim block, anyone. I just said that you should do that using the minute time frame. So if you go to 15 minutes now, you see the time where it pulled back into, this is the pullback. Alright, so it pulled back into that level, and way it goes, that's the drawn liquidity. Now some people might have missed the trade because maybe you were not on the trade, you didn't be, some people don't place alert like me. I usually place alert, so when price gets a certain level, I'm alerted, I'm being alerted to take a trade, or just to do something about the trade. So if in case you miss the trade, you can indulge, I use the word indulge, you can indulge into using limit orders if you don't have TradingView subscribed or something like that. So yeah, so this one, drawn liquidity is still, the trade is still on and drawn liquidity is still far. So but if I say okay for a continuation, so this is where I would expect a continuation to occur. If you look forward from this level, you see that there's a fair value gap here, which makes this level, makes it make sense even more. So if price comes into this whole level and then taps it, we're going to get the continuation. The only thing that you just need here is like, this kind of price action, price goes up, it taps it, it displaces to the downside, then we'll take it downwards. That's what we're going to use for a continuation in this level. That's what we're going to use for continuation in this level. So yep, yeah. So take note of that. So I'll be expecting I'm still expecting a bearish continuation for USD CHF. Likewise, other USD pairs like USD JPY, USD CHF, and the likes of them. But if they are not giving those confirmation, I'm not going to trade them. Right, then this is GBP USD. So GBP USD, we had a swing trade from last week and it hits its take profit. The trade was simply a breakout. There's nothing much there. It was just a trend line breakout. Price broke out, retested, and that's all. So nothing more about that. And so I think I can delete this one now, and then so that I can form a new bias. So given that this, because there is I don't know, I'm going to explain this thing now, an unequal move, should I put it that way? As you see, when price broke the structure, it left a fair value gap. I need to pay attention. So when price broke the structure, it left a fair value gap here. So it's not a balanced move. Usually price will move from 50% to 50%. It will just keep on balancing it. Either it comes to equilibrium, or if you just balance it, you get. Well, in this case now, after this break of structure, price did not in case even balance it. If you want to check what I mean here like this now, you see, price did not come to 50% or anything. It didn't even come close. Second thing is fair value gap that was here. This is for 4 hours. It was not filled. So most likely this area might be visited later on, not now, maybe in many weeks from now though. In many weeks from now, it's certain that so it's certain that price might get there, or will get there later on, not now. So for now, I can see that there's a present break of structure here, You can see it has two highs. So second breaker structure here. So it's best to wait to see how price will react off when it gets to this other block here. The reason why I'm using the other block, I don't use the fair value gap alone, because that level can cause chaos and then take out a lot of persons, turning them to liquidity. So I'll be waiting for this to occur for a bullish continuation. As you can see, price has now made, this is a low, higher low, higher high, higher low, and then it has gone to create an higher high. The only thing that we need now is for a bullish continuation. You get, and another reason why I marked this other block, this level to use, is because you will see this low. Yes, it's a double bottom, but then the main reason is because of this sweep of liquidity. So maybe you're not seeing it clearly. I'll show you. So you see here, so there's a sweep of liquidity here. That's why I'm marking it now, because usually it's not a setting approach to price. You know, I always say that it's not a setting approach to price. It doesn't necessarily mean that, okay, this is what price must do, this is what price is going to do. You know, it just gives this thing I'm about to explain, it just gives you a more accurate explanation. It just gives you a more accurate explanation to what price is doing, and how price might react off in a particular level. Do you understand? So when you're trading sweep of liquidity, that is, maybe price sweeps a low, usually price will usually retest that level, like that custom model that I've been showing you. So price will usually just come back, test that level again, and go back. All right, but it's not like, oh, because of you now know that, so every time that price comes there, you want to, you know, overtrade, or you want to take trades that are above your normal risk. No, you shouldn't do that. You know, risk management is key. Anytime, any day, you always safeguard your own account. So for GBP USD, I'll be expecting a bullish continuation, but I'll first of all wait for price to come into this level and wait for a reaction before we buy, or before I buy for a bullish continuation. All right, then for this is GBP JPY as analyzed on Monday. This is where price book structure, okay, and this is where it is right now. So price has really gone high, very well. If it's going to pull back, I would not use this bias anymore, because price has really gone steep, like it's so slim up. The liquidity might really happen soon. So this is where I'll be using for a continuation, because this is a breaker structure that is valid from the 4-hour. It's the only one I can see from the 4-hour structure. So, and it has an unmitigated order block. So best scenario is, so I'll wait for price to come here before buying. I'll wait for price to come down to this level before buying. And if you check it from the 4-hour time frame, you see there is another block. Yeah, so yes, that is the reason for my decision. I'm waiting for price to come there before I decide to maybe buy again for GBP JPY. Then for GBP CHF, as analyzed on Monday, this is a bearish move. It's a bearish move that has been confirmed from the 2-hour time frame with a breaker structure like this. So you can tell a trend when it has two breaker structure in a particular direction. So this is 1 and this is 2. So you have two breaker structure in a particular direction, and this level here is serving as an inducement. Yeah, let's call it IDM, right? So that level is serving as inducement. Yeah, it's serving as inducement. So price has swept that liquidity or that inducement. It has tapped into this whole level here. In fact, this whole level here is just an it's a fair value gap from 4 hours. Maybe you're not saying, but this is it here. There's a 4-hour fair value gap here. The price has tapped into it and it's presently selling. So if you want to join me with the sales here, you can. The stop loss is just at 1.06050. The target is not this low though. Target is here. Let's see here. Yes, target is 1.05615. 1.05615. So we'll just extend it to this low, which is the external range liquidity itself, which is around 1.05595. Let me just adjust it over on my MT5 here. GBP okay. All right, so I've done that already from my end. They're taking the trade is still very much at entry. As you can see, it's still very much at entry. So if you want to take the trade, why not go ahead? I'm just going to leave it for a few minutes before I take it off. So I'm just going to wait a few minutes. But that's for those ones that are taking the trades with me right now. So okay. So for those ones that are listening from watching from X, I can see that I can't see any single retweet on this, and I think probably like 17 people are watching. I don't know, or maybe more than that. You can do well to retweet it. Damn, hold on. Shit, on X I've not been. Can you imagine? Imagine that I've been analyzing this thing since, but I was not streaming it. I was streaming something else, but I've corrected it now though. Can you imagine? What a rubbish. Oh, for those ones that are on X, sorry. So for those ones that are next, I want to take the trade. This is the GBP-CHF. How many trades have I analyzed or checked before GBP-CHF? Damn much. But they are basically trades that we're not waiting for. So okay. So proceeding. I totally forgot. Okay, so let's just proceed. So I guess people that want to take the trade have taken the trade on GBP-CHF. Next up is GBP-AUD. Now GBP-AUD is printing a very weird price action, but my own bias is to sell because this is the reason why I'm going to sell. I am usually very big on two break of structures tells you the trend. Alright, so if you look at any trend at all, you must have something like this, 1 and 2. Yes, the moment you see this 1 and 2, this bullish move is no longer a bullish move, but it is usually the time when the majority make mistake and feel like, okay, no, price is going to still go bullish, price is going to use there as liquidity, and then continue buying from here. Usually it's not really the case, because what you think in your head is not what will happen. You need to just follow the price action, follow the technicals, follow what it's doing at the present, not what you've marked before, because you marked it and it's an unmitigated OB, or it is an unmitigated demand level or supply level, then you feel like it's my hold. No, follow what price is doing now. So if you have a price action like this, that price has been bullish like this, and then it has not yet taken out the structural low, which is quite okay. It has not taken it out, but you have double break of structures like this from the higher time frame. Again, mind you, from the higher time frame from maybe 4 hours, 2 hours, especially 4 hours, and you have two break of structures like this, and it has not yet taken out, let's say here like this, and it has not yet taken this out. Don't bother buying from here. because even if you buy, it might just be a little reaction. It might just be, go and check your charts, so don't take any words I'm saying. So it might just be a little reaction off, and then boom, it continues going down, and then you'll be like, oh, have you been in that case where it happens this way, and you'll be like, oh, I was in the trade and the trade went 2R and then reversed to hit stop loss. What went wrong? Usually the case is because you are not going in line with the order flow, the structure of the market. You are against it. That means you are still in the past. You had a past analysis or bias, and that's what you want to see to play out, and usually that's usually the case. That's the problem that many people face. I've seen that a lot of persons face that case. So when you're trading price action, you're trading the market structure, it's usually best for you to stick to two break of structures tells you the trend. You only need two break of structures from a higher time frame to tell you that this is the present trend. So two. And so in this case here, I can see that there is, even if I don't want to count this one set, so there is this guy here, there is this guy here. So there's already two break of structures already here. So two break of structures already is here. So that tells me that okay, I can use this level for a sell continuation. I hope what I've explained is at least a bit brief, right? So if you are watching from anywhere you are watching, do well to like retweet the stream. I think from X you can retweet the stream. From YouTube you can share the link to wherever you want to share the link to go and watch, or hop in and watch live. Okay, then Telegram, same thing, you can share the Telegram link for those ones that you want to watch it. All right, proceeding. Okay, so that's the analysis for GBP AUD. I'm looking at something else though, but let me just go into it deeper. So this is the GBP AUD from the 1 hour time frame. So you can see this is a break of structure here, one, then it broke again, two. So this, in fact, this one is even the third one. I know some people did not classify break of structures that end up with a wick as a break of structure. That's their own issue. I do classify it because this is what I think of when price. Let me give you an example. Okay, let's use another level. So when price leaves a particular line to a particular line, yes, I'm just going to use this in a vague example. When price leave a particular line, in as much as it even goes like above it like this and quickly comes back to it, what does this thing shows you? It has broken a structure. Even though it closes today with a wick, like this is a wick, it just wicked it broke structure. But I have an explanation, but many people might not agree with it, which is fine, which is quite alright, because there is no one general acceptable explanation of all these things here. It is just relative to perspective. So when I have this, why am I saying okay, this is a breaker structure even if it's a wick? It is because when price crosses through a level, it shows intent. So I'm focusing on the price action, but majorly on intention, which is it shows intent. So the intent of price is to go to that level. It visited that level, so it's to go to that level, especially when it's going in line with the structure. So I'll give an example, or let me use this example. You have a boundary between Nigeria and Lake Chad. Okay, you have a boundary between Nigeria and Lake Chad. The fact that you put one leg, that is there's a boundary line, the fact that you put just one leg into Lake Chad and remove it back, does that not mean that you visited Lake Chad already? Even if it's for a millisecond, you were there. That one leg, we're not going to say it's invincible. No, you were there. Alright, so you are presently there, meaning that you have intent of actually going before you actually came back. Which messages are this? Okay, so the same way, the only time where this stuff you don't use it this way is maybe when you have a structure that has to do with a sweep. So usually if you see this, now let me give you an example. So this is a bullish move, and then you see this quickly move and price is coming down. You cannot say that this is not a break. It has broken structure, even if it's a week, it has. So the only time when you treat it as, because the reason why people treat it like a week is because they say it is liquidity that has been swept. The only time that you should treat it as liquidity that has been swept, don't just focus on the narrative buy side, liquidity sell side. No, the only time you use it as a liquidity that has been swept is when it sweeps liquidity in line with the market structure. So in a bullish move, which liquidity are you focused on? Because liquidity is everywhere, right? Liquidity simply means money, so it's everywhere. You have buy stop order, you have sell stop orders, and then you have the stop loss orders, right? So where is the liquidity that are focused in or focused on in a bullish structure? Obviously the liquidity in the lows, right? That's the only place that you have your focus on. So when price visits a low in a bullish structure like this is the only one, or the exception. This is the only one that you don't treat like, okay, price will still go down, or price is most likely to go down. No, if it visits it, gives you a reversal, usually the case is what, it continues going up. All right, so I'm just trying to explain the intention of break of structure. Even if it closes with a week, it will still go back. All right, okay, so this session is not for market structure, but let's continue. So on these notes, for GBP AUD, I'm expecting price to come back to fill this OB here. I think it's a 2 hours order block. Yeah, 2 hour OB, and then to sell. So I need to ascertain the target. So here, so sell from here down to this low like this. Yep, so just let it go up and then sell downwards. That's it for GBP AUD. So somebody, there was one time somebody said, oh, you don't trade usually with liquidity, or I don't know. If the price action requires me to look for liquidity, I will. If the price action doesn't, I will not. And there's a reason to that. I think I wrote about that last year, when you look for liquidity and when you don't look for liquidity. I don't know where this is a session for me to explain it, or this. Let me just explain it in 2 words, but I've written about it before, and maybe around September, August last year. It's 2 words. There are times when I look for liquidity, I'm expecting liquidity sweep to happen, and there are times when I'm not, because whether you like it or not, price does 2 things in the market. Only 2 things. It's either, like ICT says, Michael, it says price is either rebalancing an imbalance, or what, or is seeking liquidity. That's the 2 things that price does. So if you have a market structure, I'll just give you clearly, so follow me. If you have a market structure like this, yes, it all depends on the break of structure type. Please listen. So if price breaks structure like this, a very short break of structure, there is no gap, there's nothing, like there is no imbalance, and there's no imbalance, there's no impulsive move, and it's kind of like choppy, that is, it's ranging, something like that, but it's short. The break of structure is very short. Be rest assured that price is going to come back, visit liquidity to move. Do you know why? Because there will be no significant move in price until liquidity has been swept. There will not be any significant move in price till liquidity is being swept. So if price is choppy and then break structure in this way, liquidity will be swept. In most cases it will, but go to your chart and also verify this. But when you have a break of structure, like I said, it depends on the break of structure. But when you have a break of structure that after a break structure is long, meaning if you check it, it has the presence of a fair value gap or an impulsive move, or it's just long, it breaks the structure away. Usually a case like that does not lead liquidity to be swept. No, it reverses and uses, either the breaker block, but there's a way to use it. It will not use the breaker block. there's a way to use. Sometimes you people mark breaker block, but that breaker block is not valid because it has been mitigated before. So maybe in front of it there's another block, then that's what price will go back visit before continuing. So it all depends on the break of structure. So get it this way, the summary is, if a break of structure is short and choppy, price will use liquidity because it needs to move in an impulsive move. And where will it gather that move from the liquidity? But if price breaks structure and then it leaves a gap behind, it leaves an impulsive move behind, it's very long after the break of structure, then it does not need liquidity. So for those people that used to ask me that why is it that most of the trades or some of the trades that I take, they don't have liquidity, like there's no liquidity sweep or anything, basically that's just the reason, nothing else. To be honest, ain't nothing, there's nothing else that makes me do those kind of things, you get. So again, don't take my word for it though, make sure you check it in your chart if these things are so, if they are true or not. Do you understand? So for GBP AUD, that's where I'm going to be selling from 1.90299. Stop loss should just be above 1.90681. From what I've just explained, you can now see the reason why I want to sell from there. So if you go to maybe 2-hour time frame, I need you to pay attention to what I'm about to do. I'm not explaining myself in this one again. So if you look at this breaker structure, it's quite clear that this breaker structure is not like a sweep, it's not choppy. If you even see 4 hours, it's still going down, and maybe in an hour from now this candle is going to close, right? It's going to close. If you go to 1 hour, you can see there's no choppy move here, it's not ranging, and it's not like a sweep. The breaker structure is not like a sweep. It didn't break structure and reverse immediately, no. So in that case, I'm supposed to use a breaker block, but I want you to pay attention to something. If I'm to use a breaker block, this is where I'm going to use from this low to this high here, like this, and then drag it out. But it's a mistake that many of you do, because a breaker block is only valid when there is no mitigation, meaning it is a failed order block. There was no mitigation on it. But if you look at this, you have mitigations in front. This one now, you have mitigations in front of it. In fact, you have another block in front of it. So I've always thought, I've not changed what I've been teaching, because it's what I seen on the chart, is when you have a case like this, do not mark this breaker block. If you mark it, you will hit stop loss, I promise you. Don't mark it. What you should then use is a what? Is the other block in front of it. So instead of marking that level, you go ahead to use the other block that is in front of it. So you get, so you go back, use the other block in front of it. We have two. I just picked that last one there. I hope you understand what I've explained though. This case now is almost similar, but I think you grasp it. Obviously you do. So that's GBP AD. Next, GBP CAD. So for GBP CAD, let me show you an example. What I just explained just now, I told you that it all depends on the breaker structure. If you look at this breaker structure now, when price broke the structure here, what did it leave behind? It left a gap behind. So it left a gap behind. It is also impulsive. So in a case like this, I'm not waiting for liquidity to be swept for me to trade a continuation. The only thing I'm waiting for is this, a break and a pullback. But all this thing, it takes experience for you to know that this is the things that are happening, or this is the thing that is happening, But then normally sessions like this, we handle them on Saturday. Today let's just focus on analysis. So on this guy, we have a breaker structure here. Most likely this will sweep liquidity, because you can see this is the 4-hour structure, and you can see that it is choppy. Price action is still choppy. So I will expect price to sweep liquidity in this case. That's what my own expectation will be. If it doesn't, then I'll miss the trade, and I'll gladly do. Do you understand? And I'll gladly miss the trade. It's as simple as that. Alright? It's as simple as, let me give you another example here. See this breaker structure here, right? I see classified as a break of structure. Many of you would not, but I do. So but when you look at it, after visiting this high or sweeping this high, it is too tiny, it reversed quickly. What am I going to expect? A liquidity to be swept, and this is it before it continues. It's just basically just like that. Let me show you another one. So that's why I said don't take my word for it. Make sure you go and check it yourself on the chart. If it's not the same thing, you can block my line. Yes, I'm that confident. So you can see this break of structure here. Now it's not like you will then see this 90% or 99% of the time, but I'm telling you, see at least 80% of the time, usually like that. 80%, 70 to 80% of the time, usually like that. So if you see this break of structure here, right, what do you see after the break of structure? Is there an impulsive move? No. Is there a gap? No. But what can you see? It's choppy, meaning that the price action is not clear. It's so meaning that it needs liquidity to be swept before it moves. Remember, I said there will be no significant move in price until what liquidity has been swept. So price came back and did what? And swept liquidity before continuing. You can just go on, and let me show you this now. This example now, this is a break of structure. I'm glad that it's not like I prepared all this down, we just stumbled upon it. This is the break of structure, but what can you see after the break of structure? That's why I said the focus is on where the break of structure. What can you see after the break of structure? An impulsive move. There is a gap, meaning that after the break of structure, price action went and is long, right? So in this case, I'm not expecting price to sweep liquidity in this case. No, I'm just expecting price to pull back and then take a continuation. If I'm going to mark a breaker block here, is it valid? No, because a breaker block is a failed order block, meaning it does not have any mitigation whatsoever. But if you look at this level here, was it mitigated? Yes, it was mitigated by this guy. So there is no way that I will be using that breaker block. So what then should you do? What then should you use? I've always advised, then use the other block in front of it. There's no need to worry yourself about. Then use the other block in front of it, and so you see this, then we use this, and price moves on from there. But like I said, this is the reason why I'm usually very technical when I'm trading. But like I said, you don't need, it's not happen 99 to 100% of the time, but 70 to 80% of the time, I can guarantee you that it does. But don't take my word for it. Go to the chart and verify the things yourself. Okay, all right, so let's proceed. So for GBP CAD, I'll be expecting to buy because of the way price actually is moving now. So just wait, that's going to be my bias. There's an unmitigated OV here, and there's also a fair value gap that has not been mitigated at all here. But best case scenario is I'm going to use this one. Why? Because it has a sweep of liquidity by the side here, then inducement here, then unmitigated OV here. So if this level fails, then I just know or zero my mind that it might not hold at all. You get? So I don't usually put these markings, so it's because I'm doing the analysis for everyone, and that's why it's there, or that's why I mark it, because I'm analyzing for everyone. I can't see anybody retweeting this session from Twitter. There's only one retweet that is there, and I was the one that retweeted this. It's me that retweets my team myself. So I need you guys to retweet it. It's not, hold on, it's not hard now. It's not a hard job for you to just retweet where you are, what you are seeing there. Okay, anyhow you want to do. If you don't want to retweet, all the best though. Let's proceed. Yeah, I have some trades running in synthetics. I need to watch. I need to go back to watch. Oh shit, they're reversing now. I don't mind. It's a swing trade. Let's see this one. So yikes, the GBP CHF trade is selling hard. Thank God I risked up to 1% in my account in this trade here. Alright, so let's go. This GPCAD, we've analyzed it already. Then Euro USD has already hit our take profits. This was a very simple trade also. It was a breakout. This was a breakout. So wait, no, not like this. I remember what I did. Yes, this. You know, last year when I taught when I did a 3-month free mentorship, I taught people how to use a trend line. Now many people can tell you trend line trading is not profitable, yada yada yada. I use it, I've been using it, it's profitable to me. But for those of you that might be watching this live and they may say, oh, Dios uses trend line, or this is the way Dios trade, you might want to assume that that's how I'm trading, but don't just take it as face value, because there are certain things I understand. Like for example, what I just explained some moments ago, I just explained is like the anatomy of price action, like what I'm expecting when I see a break of structure, how I verify different types of break of structure, why I don't trade a breaker block. Are you seeing all these things? So if you just look at the analysis based on face value, you might make mistakes. There are certain things that I know, there are certain things that I do, and I just explain few of them. I just, like in this session now, I've explained how to identify a market structure when I said you need to break of structures. Alright, I also explained about the type of break of structures that we need. I also said one of the things that would that is very key to me, which is there will be no significant move in price until liquidity has been swept. I've also explained why that is. I've explained the type of trade that you take during an expansion and contraction market structure. So you see, you don't take them at face value. So somebody might see that, oh, it uses trend line liquidity or it uses trend line breakouts. No, don't just take them at face value. The same things I understand, and that's why I teach them, and I teach them, and I continue to teach them every time and every session that I have, or every opportunity that I get to do so, I do. And this is the reason, one of the reasons why for now I'm not doing any mentorship. So anywhere that says you want to learn whatever, all the videos are in my YouTube, all the videos are on this X, all the videos are in Telegram. You watch them yourself, and then you get whatever you can get from them, basically. Alright, so don't just take them as face value and say, okay, I've gotten. No, go and watch the videos. At least they are available, so you go and then you watch the videos. I mean, YouTube has a preferable catalog, it keeps them well, so you just go and watch them. Alright, so I'm going to proceed now. So for EURUSD, this is the reason why we took that trade. It was just simply a breakout, and the price is still bullish, but already I already can see a level where I will expect a continuation from. So if you look at this 4-hour price action now, see, this is an order block here, but unfortunately what has happened to it, it has been mitigated. That's where we entered from. That's where we entered from. So but what can you see to the left now? You see that there's a sweep of liquidity here. So if there's a sweep of liquidity here, meaning that this structure low, I'll trust it more, given that this order block has been mitigated. So, and there is an unmitigated order block here, so this level now will be where I'm going to be expecting price to continue from, which is basically what? QMR. So this is a QMR, some people call it Quasimodo. So but I've said it that they are all the same, they just carry the same name. QMR, Quasimodo, reclaimed block, all of them are the same thing, regardless of how you want to trade them. So for EURUSD, this is where I'll be taking a bullish continuation from. Hopefully there's a reversal that sends price into this level, and then we take a trade from that OB there. Alright, so proceeding to the next one, we have EURUJPY. Now for EURUJPY, I marked this level on Monday. I'm going to change the bias now and change it to this low here. So I'm going to expect that this low is swept. Alright, I expect that this low is swept, and then for a bullish continuation. But the only problem that I have with this price action, let me just say it out now, The problem that I have with this price action that it's steep, like it's too steep. When I mean it's too steep, like it's just like it went too far in one direction. It did not make any low or clear swing low, swing high. In fact, the last swing low, swing high that I made is here. This is swing low here, and then this is swing high here. Ever since, everything that is just creating is just jargons. You get? That's why I said it's a bit tricky, but Yoruba will say I'm a fokolobe. I'm a fokolobe, meaning use your head and carry it. So we're gonna follow base. We're gonna follow and base it. Huh? Okay. Alright, so let's proceed to the next one. This is Euro JPY. Next is Euro GBP. Now for Euro GBP, I'm waiting to take a sell here. I'm waiting to take a sell for Euro GBP. I'm just waiting. So I don't know when it's going to be ready. Okay, I know when it's gonna be ready. I don't know when it's gonna be ready, but let me break it down for you. It's clear. I just explained market structure, all the yada 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 for you, right? And I told you need how many breaker structures to tell you your trend. I said 2. So how many breaker structures can you see here? We have 1 breaker structure and what? 2 breaker structure. And I also told you the kind of price action that you need to tell if price is going to sweep liquidity or not. After this breaker structure, I can see that price left an imbalance. I can see that it's impulsive. It's just that it's choppy in this level. Simple thing that's going to happen here is that price will eventually use this high as liquidity, then boom, goes up and then mitigates the other block. Like I've said, if you want to use the breaker block here, I usually use 2 hours on my POI also. People that have been following me for up to a year now, they know that I use 2-hour POI. If I want to mark any POI, it's 2 hours. It's not a secret. There's no need I'm hiding anything. No. You see, I can tell you all the ways I take a trade, everything I see, everything I look out for. You might use it and it might not work for you. You know why? It's because you don't practice with it. I have numbers of hours of sleepless nights of trying to get it, using and practicing it. So that's like one of the major problems that we have with mentors and mentees. So a mentor that tries to pass his or her knowledge to another person the best way that he can, after doing their own due diligence, taking their classes and doing their live classes or live trading and all that, just like I'm doing now. The only difference there is if you, as one learning from that person, if you go and check the charts and practice those things, that's honestly speaking, that's the only difference. That's because it's like muscle memory. Let me say it's muscle memory. So your brain remembers certain things. It has seen it somewhere. It's going to remind you that this is how it went. Your brain remembers certain things. But if you don't feed it with those things, what happens? You're going to keep on making mistakes. And you need to just understand. I think I was on a space some I think maybe last 2 years. It was Kenny that was on that space. Most of you have never seen Kenny on a space before, but I think he hosted that space. And he said one word that was very vital. Then he said, what was the word he said? He said, give yourself to the chart. Study the chart until, he said, this is the word he said. He said, study the chart until your eyes can see certain patterns. It's not saying you should go and trade pattern. No, but you are studying the chart to the extent that the muscle memory, you build your muscle memory, muscle mass in your brain, and it just remembers certain things. Because the truth about price action is everything that is going on price has happened before. Everything, there's nothing new. Just like how the Bible puts it, the Bible says there's nothing new under the sun. Everything has happened before. The only problem that people have is the acceptance to the probabilistic nature of price. That's the only problem that they have, because it has a probabilistic, intrinsic value there. But then that's it. So in this case here, this is impossible after the break of structure, like I've explained. So what is the next thing I've said you should do? I say mark out your POI. In this case, if you want to mark out the breaker block now, what do you see in front of it? There is mitigation here. So meaning that this breaker block is not what? It renders it invalid. So what I say you should do, I say use the other block in front of it. And so that's why I'm taking this trade from this other block. As simple as that. Things I'm explaining here are the things that you will learn in your mentorship group. Whether you like it or not, if you think I'm just capping, all the best for you. Me, I don't like to prove myself to anybody. all the best to you, Jerry, my bro. So I have a bias on Euro GBP, and hopefully we see it play out. Next is on Euro AUD. Do I have a bias here? No. But mind you, we already have two breaker structures, right? Like I've told you. So you have here and you have here. Although this one even broke out this major structure. So what we're going to be waiting for now is how price is going to close, because how it closes will determine if I'm going to use it as a sweep of liquidity or I'm just going to trade it off from the other block. I hope that is already very clear now. So let's just proceed to the next one. Next is on Euro card. Now from this way is even looking at, you can see that price is choppy. This is the structural low. The only thing I want to now look out for is, has the other blocks that are here, have they been mitigated? If they have been mitigated, then we can't use them. So this other block has been mitigated. The only thing that we have here is a rejection block. So here's what's going to happen. We're going to wait for price to come into this rejection block. So if price is coming, this is what it's going to do. So it's going to come like this into the rejection block. So only if it comes like this and then shifts, that's when we're going to buy. If it doesn't do like this is going to happen in the lower time frame, preferably the 5 minutes time frame or 3 minutes time frame. So I did not see 1 minute. I don't have business going there. There are some people that trade in 1 minute and they trade it perfectly. Just the way you will never hear me bash anybody's strategy or system. So I don't trade 1 minute, but you can look for this displacement in 3 minutes or 5 minutes, and then when you see that, then we can trade it. All right, then we can trade it. Okay, so let's proceed now. So if this, okay, I remember there's something I wanted to say. If this rejection block does not hold, if it doesn't hold, yeah, what we're going to do then is you're now going to flip bias. So from buying, we're going to be selling, because by then we would have had a structural breakout, a clean breakout by then. So but then let's just follow the trend until the trend has ended. That's on Euro card. Next is on NZD USD. NZD USD. So you see what I explained the last time. So on Monday when we met, what did I tell you? I said that we're going to trade using what? QMR, which is Quasimodo, which is the same thing as what? The reclaimed block. I explained all of this. I explained all of this the last time. So so this is it here. All right, look at this now. Clearly look at this. This is yeah, the streaming has stopped. Okay, as I now, the blood of Jesus. You see the streaming has stopped. It still shows as a streaming. We can't see your chat. Oh sorry, I've corrected that. Okay, is it that it stopped in Telegram? It's still showing though. For those ones that are in Telegram, maybe it's those ones that are in Telegram that can see. If you're in Telegram, I can see Just Believe, King, and Ojediran Favor. There is a chat room. Go to the chat room and then tell me if it's still, let me post the chat room link. Some of you are not in the chat room. Where is it? So go to the chat room and then tell me if it's still live or not. Where the fuck is this chat room now? Okay, this is it. So I've posted the chat room again. So go to the chat room and tell me if it's still live, because okay, Ojediran has entered the chat room. So Favor, is it still live? Can you still see me? I mean, can you still see the chat? Before I proceed, because that's how I didn't know that it was not visible on X, but they don't used to reply in that place. I didn't know, but thank God I eventually got the wind of what was going on. No words, is it like, no, it's not showing, or it's showing, it's not visible? Okay, let me end it and start it again. That's for those in Telegram, don't worry. I will just stop sharing and share screen again. Shouldn't take long. Oh, I see, it's not sharing before. So I'm sharing it now. So check, confirm, is it visible now? You can't hear it, it's about. Check it if you can see it now. I started it again. Oh boy, there is no live going on here in the chat room. It's not in the chat room now. I think these guys are not understanding, so let me just end the Telegram on. I'll restart it. I think it's stable on X. Yes, I have ended it. The solar chill. Alright, starting it again. I made a comment on X. Okay, you made a comment on X. I didn't see it though. I will check it already. So I'm streaming it again now. You should be. What did you make on it? I'm not. Okay. It's showing on Telegram. Oh, so basically it's their network now. Guys, if you're not seeing it, then it's your network. Oh. Alright, it's your network. So, but I'm streaming it again. I started it again, and I think it should be fine now. Okay. So NZD/USD. Like what I wanted to explain is I can give you 3 explanations right here, right now, for what's going on NZD/USD. 3. One of it is basically reclaim block strategy, which has to do with just the sweep of liquidity, right? That's just sweep of liquidity, price reclaims block, or Quasimodo or QMR. That's one. 2 is, I can tell you, okay, is SBI, which is structural break and inducement. So you have the POI, you have an inducement, and then you have price to do continuation, which is something like this. So this SBI, structural break and inducement, this is it. But there's a logic behind it. That logic is usually what I explain, or what I explained in the type of break or structure, that the type of break or structure that you have, or the type of break or structure that you see on the chart, they determine to a great extent if liquidity will be swept or not. So in this case, this is a break or structure here. Alright, after the break or structure, is there an impulsive move? No. After the break or structure, is there a gap, like a fair value gap or whatever? No. So when I said that, I said, what then would happen, or what then should we expect in that kind of market structure or price action? I said, wait for a sweep of liquidity, because that entails that, okay, there's intention to go in that level, but it's not enough. I'm just explaining the logic now. It's not enough. The fuel is not enough to move the engine or the car to that place. So what it needs now is to refuel, and in this case it goes back, it takes liquidity and then continue. And so that's when you see this, and so that's when you see this. So price came back, swept liquidity, reverses. So you can see all of this, I guess. No hard, it's not hard. I guess, I hope you get that though. So but it's not hard, chat. So right now I can delete this now. So right now price for EURUSD has broken structure to the upside. There's a gap here, but this guy has some shenanigans in front of it, so there's no way for us to use breaker block here. So what then do you use? You mark the order block. It's pretty simple. This is simple stuff, right? So I'll be expecting a continuation around this level. If it doesn't continue, then we still have a fair value gap below that we can wait for a continuation. As simple as that. All right, so I guess I can proceed to the next one now. So that's for NZD/USD. We took profit already. So we took this trade on Monday. A lot of trades that I took on Monday, all of them, majority of them hit their take profits before today itself. So, and NZD/USD was one of them. So for NZD/JPY, price is bullish, as you can see. The only price action that I can say I would trust if price comes below here, because of the way it is. It's just like when I explained EURJPY, it's too steep. Like the direction is just too steep, so it's usually very hard for you to make a decision in price actions like that. Just wait for liquidity to be swept before you make your decision. So that's the NZD/JPY. So wait for 4 hours mitigation of the OB. Then this is NZD card. I gave you both the entry, everything was given. Now from what I explained in the type of breaker structure and how to use it, I think you can see another example here. The breaker structure, it shows intent to go in that direction, but will it? Yes, because that's the major structure. But what does it need to move? Like I said, there will be no significant move in price until liquidity has been swept. So what price had to do was it had to come back, sweep liquidity, of which it did here, and then continue. So I can either trade below this liquidity, as they used to call turtle soup, or I don't know, they have many names now, or I can trade it as a reclaim block, of which that's what we did on Monday. So when price came, you can see this is on Monday price action. So price came, I said we're going to buy from here. You can either trade it as a reclaim block, a QMR, or a Quasimodo. They are all the same thing. So that's how we caught these buys on NZD card. So I think we're done with it. Price has hit our take profit now. Now price has broken structure here. But if you look at it now, what can you notice? You see that price did not continue or close with a gap. There's no fair value gap. There's no impulsive move. Most likely what's going to happen here is sweep of liquidity. It's not hard to know. Like I said, don't take these things that I'm saying in face value. Go back and study them. They are what I've been using, and they've usually kept my head afloat. So in this case, I'll wait for price to mitigate this order block, because this is the only other block that has not been mitigated here for a continuation. Alright, for NZD card. So if you trade NZD card, this is what I think will happen or might happen. Alright, what's this? So that's what I think will happen or might happen on NZD card. Okay, what's that? So let me just draw it out. So there's an unmitigated OB here. Alright, all mitigated. Okay, so let's go on. NZD card, then NZD CHF. This price, like I said the last time, I said this price action was all showing all levels of madness. Just imagine trading a price action like this, you go almost crazy. So that's why, honestly speaking, that's why I've not traded it. I've just left it alone. It's not me, it's going to turn the mad person. I'm just going to leave it alone. Alright, this is AUD/USD. It's still running. So it's one of the trades that was analyzed on Monday. Was given both entry, everything, right? Was given the same explanation of breaker structure, what to expect. You can see it again here too. The breaker structure has no impulse after the break. It does not have a gap after the break. What should you expect? The sweep of liquidity, and that's what price did. It swept liquidity. Once you cannot trade before that, like the sweep of liquidity, no worries. You can trade the reclaim block. it is even a more better approach because you are waiting for confirmation. In that case, you can trade the reclaim block strategy to QMR or the Quasimodo, however you call it. So that's where I give this trade, and I'm still holding this buys to this high. So this high here is the drawn liquidity as explained on Monday. So that high is the drawn liquidity. All right, so that's ADUSD. So there's no need to mark a new bias because I'm still holding the trade, and hopefully by the end of today it gets to the target, which is at 0.7188, 0.7188, 71838. Hold on, this company is calling me. Hello, good morning.
Hello.
Yeah, good morning.
Good morning, sir.
Yes, can you?
How are you today?
I'm okay. Can you please call me maybe in 10 minutes from now? I am doing a live stream, and
all right. I'll give you a call back in a minute.
Alright. Okay, so back ADUSD. So we're waiting for it. Hopefully it gets to 71838, and then we move on from there. Then this is ADJPY. I've not seen an entry on ADJPY. I think the last time I got an entry was here. I bought to this level here, and I've not seen any entry yet. I've just been seeing price just mitigate and run. So mitigate this OB, run away, mitigated this OB here again, also run away, like that. That just mitigating and because so I've not really gotten an entry, and it's still going. So I think the drawn liquidity on this guy is here, so he's not really giving me anything tangible to do, so I'll just leave it alone and find something else. AD card also nothing here, nothing here at all. Let's see ADCHF, nothing too. The price action was choppy. I think it's because of the CHF that is attached to it, honestly. That's why this price action is like this, but I don't know, maybe by next week we'll get a better entry on this. CAD JPY that we were holding last week eventually hit its take profit. It's just small, just 2 hours, not much. 1.71 safe, so not much. Then CAD CHF, I told you that okay, after price breaks this low, what we're gonna do is this. After look, okay, let me show you this. Right, this is price breaking the low of the structure. So basically this is just break and a what, a break and a retest. As simple as that, as simple as a break and a retest can be. So price breaks it down like this impulsive move. This is the low before it breaks it. Okay, now if you want to maybe use the, like I've explained, when price breaks a structure, the kind of break of structure that it does, if it's impulsive, has a fair value gap, whatever, there's no need for liquidity to be swept. In that case, price will just go back, pull back, mitigate that level that did not respect, which is a breaker block, another block, whatever the case may be, and then use that level for a continuation. In this case, you can see that there's two lows here. If you use this present low here as a breaker block, right, this is supposed to be the rejection block later on in the future, or however we want to refer to it. It's the same level in all of those time frames. So where do you see price retest? It breaks, gives a gap, gives an impulsive move, reverses. That's why this line was there as analyzed. I showed you this was the last week stuff though. Then it reverses and then it delivers. Simple stuff. But then I said simple because it's simple to me now. It's not so simple unless you give yourself, you study the chart yourself. Like I said, it's not going to happen all the time, but majority of the time that's what happens on the chart. So that's CAD CHF JPY, whatever. But then this CHF JPY, I've not been able to get any entry on these guys. They have been running away from me. I think the last one that we should check, this crude and then this BTC. The last one that we should check should be, okay, gold. So I'm presently buying gold. My reasons are very simple. I'm just presently buying gold. The only reason I'm buying gold right now is only one, is because of prices at a fair value gap in the 4-hour time frame. That's all. And I only waited for price to come to this consequent encroachment. See it here, let me show you. Consequent encroachment means middle. So this is the middle here, the middle here, like this. That's just it. Not, I don't have any other reason to tell you. That's just the only reason. And then my target is this 4-hour high here. This level here is the targets. That level there is a target finish, nothing else. So if you are buying, maybe you want to buy with me or something, you can go ahead and buy. Price is presently at the current market price. Stop loss is at 479137. Then the target is around 489719. 481719. Yeah, that's the target. So yeah, that's it. I think the last one should be US30. US30 has delivered. It's done 3 hour, and I'm waiting. This is QMR now, so I'm waiting for it to come back and reclaim this block so that I can take a continuation here. That's also so because of the sweep of liquidity and this, so just waiting for it to sweep and then continue. I think yeah, I think that's basically everything that we have for today. We will be ending the session in a moment. Like I said, there's no news for today, no news at all. So usually on days like this, when there are no news, you usually have one of the best price actions. One of the best, honestly. You have one of the best price actions that you can get. And hopefully that's what happens today. It's just 9:44 a.m. Always before I leave every stream, I'll tell you it's usually best for you to start your day with God. So make sure that you do your devotion, commit the rest of this day to God's hands, and commit the rest of the week to God's hands, right? Everybody's using something now. Everybody is using something. So it's either you pick a side, don't just stand on defense, alright? If it's Shango you want to go and serve, just make sure that you are backed up spiritually with something. Remember, you being profitable has nothing to do with courses that laid on your head at all. It all depends on you. Your life is in your hand. However you want to do, or whatever you want to do with your life, is all dependent on you and you alone. You are the one in charge of your life. So what's my advice to you? Then take charge. Alright? When you wake up in the morning, every decision that you're going to carry out till you sleep again in the night, who's going to do it for you? You. So meaning that you're the one in charge of your life. So take charge of your life. Those silly mistakes that you usually do, and they are always reoccurring, just stop making those mistakes. I say, oh, it's hard to do them, but that's why to be successful is hard, because we have very few people that can give themselves to being disciplined and then sacrifice certain things that makes them comfortable. Making those mistakes make you comfortable whether you like them or not. You don't just know. Some of you make mistakes because of, oh, trade is coming to your stop loss, you want to remove your stop loss, add more trade. You have all these stress coping mechanisms, and they are the one actually holding you down. Flip the case, reverse psychology, everything, and get better. Your life is in your hand. You can do whatever you plan to do, but just make sure you just give yourself wholly and completely to it. So I'm going to see you again on Friday. This is Wednesday, so Friday we're going to come back again to continue. Oh, if you want to get an account with Hola Prime, you reach out to me. You use my discount code DIOS, just DIOS alone. You get a 30% off any account of your choice. Alright, I think that's all. Nothing else. For those ones that have questions or whatever, you drop them in my DM or drop them in the chat box. The Telegram channel is not a closed channel. That's why I created a chat box in the Telegram channel where we discuss. So I'll see you when I see you. Take care of yourself.